Bliss and CA Meet. This is an interactive platform or forum for CAs to exchange ideas or knowledge. And the topic for discussion is Section 68 or 69 of Income Tax Act. We are inviting our honorable speaker, Mr. C.A. Naveen Karima. Over to you, Naveen, sir.
Thank you, sir. So I'm blessed to be a part of this group, Water Bliss Share Group. And it will be our endeavor now to consistently, dwell upon various topics in the income tax week after week. We hope once the new finance minister gives the budget, that also our group should be the first one to, debate on the various amendments made in direct taxes. Let's hope for the best. Before starting the session, I want to offer, my pronouns and condolences on the departure of our esteemed chartered accountant and advocate Shri K. Ravishankar sir, who scored the professional fraternity as a colossus in his field. He was an expert in indirect taxes and also, FEMA of late. We remember in the 90s, 95, 96, 97, etc. When, the institute, only the CA final students, the coaching class was there only in the institute. At that time, sir used to come and teach indirect taxes. And Padam sir used to teach direct taxes way back in the 90s, I'm telling you. So, we have lost a gem of a person. So, through my Water Air Police group, I offer my condolences and also pronounce to the departed soul. Now, coming to the section 68 and 69. The 68 is there in the statute from when the act is there, basically. What is basically 68? You will take you through the theory, interpretation, as well as the case laws. And how the courts over a period of time, they have, interpreted the 68. Point to be noted is a draconian provision. And if today, if section 68 is invoked by the assessing officer, or by the CAT appeals, the CAT appeals has the power of enhancement also. Then the rate of tax, my dear friends, to be noted is a 60%, astounding rate of 60%. If at all 68 is invoked, all professionals should remember the rate of tax is 60% plus surcharge at 25% of 60, which is 15. 60 plus 15 is 75, plus 4% health and education cess. I would question the government of the day, you are collecting 4% health and education cess. Where is it used for? Where is it used for? Where is the health and education cess used for? Is, one of the matters of debate discussion. In any case, you would not like to enter into that realm, but it's a matter of great debate because surcharge is okay, 15%. Education cess and your that is 4%. So 60 plus 25% surcharge plus 4% health and education cess. It becomes around about 85% tax. And if you include penalty, this including penalty under 271 ASC is 10% of tax. So 60% tax, 25% surcharge, 4% health and education cess, 78%. You add 10% of penalty under 271 ASC, 10% of tax, 10% of 66, goes to an astounding rate of 85%. First question itself, I am asking the king or the emperor or the throne, is it viable, is it feasible, is it a sane decision to levy tax on an assessing at 85%? When you are coming to the new regime, we are reducing the taxes, but you are telling me I am going to collect tax at 85%. Anyway, that is left for the government of the day to decide. But after the demonetization in your November 16, from December, by way of an ordinance, 60% tax was introduced. So therefore, what I want to tell all of you is basically, you will have to be very much alert Because if 68 is as and when is invoked, then it would lead to an astounding rate of 85% tax. That is the first point. So 68 read with 115 PPE, read with 271 AAC. Penalty, surcharge, tax, cess equal to 85%. Now start with the section 68. What is the heading of 68? Section 68 heading is cash credit. First point, sir, cash credit is only the heading. Now let us go to the section. Here and there we'll try to interpret and we'll try to discuss. Very, very interesting section. Where any sum is found credited in the books of an assessee, maintained for any previous year. So any sum found credited in the books, any sum. See the connotation there, it says any sum. Any sum is what? Any sum may be a loan, any sum may be a gift, any sum may be a check, any sum may be a journal entry, any sum may be a cash. It may be anything, any sum it says. Any sum is found credited in the books. That means what? There should be necessarily mandatory a credit in the books. That means books of account should be maintained by an assessor. Without books, cash credit cannot be invoked. So any sum is found credited in the books of an assessor. Maintained for any previous year. Very, very important. Today there is a search. Today there is a survey. Today there is a search in Bliss house. FD is found. FD receipt is found and it says investment made in FD in 2001. They made an FD for 2001 and the FD is made for say 20 years FD in SBA. Search has happened today is 8th of June 24. This FD pertains to 2001. Can I add that 2050 today in 2024 assessment? You will see that. And the assessee offers no explanation found credited in the books, okay, maintained for any previous year. And the assessee offers no explanation about the nature and source. See the nature and source. Assessee offers no explanation. So it is incompetent. The onus is on the assessee. You please give the explanation. For what? For the credit found in the books. Give an explanation. About what? About nature and source. Nature and source. You will see. Or the explanation offered by him is not in the opinion of the EO satisfactory. Or the EO, in his opinion, it says explanation is not satisfactory. Earlier, we could have satisfied the EO because we could have met him. We could have met him, we could have explained. And their access to satisfy the EO, explanation will be accepted. So those days we could meet the EO. Unfortunately, today it is baseless assessment, baseless appeal, baseless penalty. So now assessing officer is not satisfied. Then he says sum so credited may be charged to income tax as the income of the C of that previous year. Fine, sir. Now there is a proviso. This is a recent amendment. This is a draconian amendment, my dear friends. Please inform all your friends today itself. Go through this amendment. Please inform all your friends today itself. What it says, provided that where the sum so credited consists of loan or borrowing or any such amount. So, this proviso is tackling loan or borrowing or any such amount. A man is known by the company keeps, so that any such amount should be in the nature of a loan or borrowing only. By whatever name called. Any explanation offered by such assessee shall be deemed to be not satisfactory unless the person in whose name such credit is recorded in the books also offers an explanation about the nature and source of such sum so credited, and such explanation in the opinion of assessing officer has been found to be satisfactory. Basically, it's very simple. There is a credit of a loan or borrowing. You know, loan or borrowing is a credit in the books of the assessee, right? So there is a loan or borrowing. Now the problem is, he is telling that loan or borrowing, suppose I were to take loan from Kamlesh. Naveen has taken loan from Kamlesh, 1 lakh rupees. Very good. So, now what the law is telling, Kamlesh in turn took the loan from Mr. Gautam. So Naveen has taken from Kamlesh. Kamlesh in turn, the source for Kamlesh is from Gautam. So I took a loan of 1 lakh from Kamlesh. For the source for Kamlesh is from Gautam. So this fellow is telling now I will ask the source of source till today. Last year's budget. Before that, till today, they could not have asked the source of source. Now, the amendment has been made. Now, if my case is open for scrutiny, taken up for scrutiny, Then they will tell me you give confirmation letter to Bliss, you took a new loan. Fine, sir. So I have to go to the genuineness, creditworthiness, identity. Identity, creditworthiness, genuineness. So identity, how to prove PAN card or Aadhaar card of Kamlesh, no problem. Or ITRV of Kamlesh, financial statements of Kamlesh, ledger account of Kamlesh, bank statement of Kamlesh. Doesn't stop here. We are telling who is your separator, creditor, separator. So in the books of Kamlesh, they are telling now how did Kamlesh get the funds to give you loan? Sir, he took loan from Mr. Gautam. Come on, I want the ITRV, ledger extract, bank statement, confirmation, even from Gautam now. The problem with me and associate is if I ask Kamlesh, he tell me, who are you to ask me here? Who are you to ask me financial statement? I will give you confirmation letter. Who are you to ask me bank statement? First of all, I tell I gave you loan. On top of that, you are asking so many documents. You repay my loan with interest. On top of that, I will go and tell I don't want not only your financial statement, not only your ITRV, not only your bank statement. I want the same three things of your separator also. Then you will tell not required at all. You give the loan immediately to me. I cannot give it. But now, unfortunately, that is the practical scenario. Unfortunately, the is tracking this person. Person in whose name such credit is recorded in the books also offers an explanation about the nature and source of some creditor. That means Kamlesh has to give the detail. Person in whose name such credit is recorded in the books of such associate also offers an explanation about nature and source. I also should offer nature and source. Kamlesh also should offer nature and source. For Kamlesh, what is the nature and source? Loan from loan. So all these three now I have to take it. Henceforth from this year, my dear friends, if they have taken loan, please inform the client you have to collect these 5 documents: identity, creditworthiness, and genuineness to prove. The problem therefore is because Act is amended, Act is passed, and it is already incorporated in the statute. As and when, if at all, you are taken up for scrutiny, your client's case or your case is taken up for scrutiny. If they ask, and the reason is for your creditors confirmation, example credits, then this detail will have to be given. There is no way out. I am telling you there is no way out. So all the more now, it will become more than 60% now. This is the second proviso, is the old amendment. Provided further where associates a company not being a company in which public are substantially interested, sums of credited consist of share application money, share capital, share premium, etc. So what is this? This basically post that lovely exports case Supreme Court in 2012. 2013, lovely export Supreme Court judgment was there. What is that lovely export Supreme Court? Sir, this proviso, second proviso offers, it applies only to unlisted company, closed date company. It does not apply to a listed company. It applies only to a company in which public is not substantially interested. Okay? Therefore, this applies only to a listed, unlisted company or a closed date company or a private limited company. What is it? What was lovely exports case? In that case, what happened? The directors, they went to a slum. They got hold of some example. I'm just telling you in brief. I don't want to go in detail. Law has changed on that 2012. They went and got 100 slum dwellers. They told, come here, all of you, 100 slum dwellers. Give me your KYC norms. They opened 100 accounts in their names, SB accounts, and they gave money. Take 10,000 rupees each, deposit in your bank account, then give the check to me, and tell that I allotted you share application money. So that is how they did 100 slum dwellers. That is why the law was changed for this. That is why what they are telling, person that your share application money from whom you have received, even that fellow, the person being the resident whose name such credit is recorded in the books of the company, also offers an explanation about nature and source. Each of these slum dwellers should have offered the source. So now they are telling it's an unlisted private limited company in whose name you have taken share application money, share capital, share premium. You also please give the source for having made investment in my company. And if the explanation, in opinion of the assessing officer, is not satisfactory, then he will make an addition as cash credit. So the name is misleading, is a misnomer, my dear friends. Cash credit does not mean only cash. It also means even check also. Don't think cash credit is only cash. This is the second proviso. Now anyway, the third proviso is very simple. It says that first and second proviso will not apply to a venture capital fund or a venture capital company, etc. That is fine. Come to the issues now. So when is 68 triggered, sir? Basically, found credited in the books. So what is the meaning? Any sum found credited in the books. So the meaning of credit of a sum. So 68 would be triggered only when credit of a sum is found in the books maintained by the assessee. So as I told you, although the heading is cash credit, scope of 68 will not be confined to cash transactions only. Section 68 usually means any sum credited in the books of an assessee. The sum of money is not to be restricted to cash transactions only. It will also apply to credits representing amounts received by either check or by draft. Also, the expression any sum is very wide and it is general in nature. It will cover all sorts of credits, including loan, other proceeds, capital account, and trade credits, etc., whether in cash or in kind of similar nature, etc. And these may be in name of the assessee, that is capital account, or in the name of a third party also. So all credits will be covered. Now, credit of any sum in the books of an assessee, in order to be treated as cash credit, basically, should be capable of being treated only as your capital or income. Each and every cash credit in the account books of an assessee will not fall under the ambit of 68. See, sir, there may be a loan, there may be a borrowing, there may be a gift. So all this is telling it should be capable of being treated as income or your capital. Each and every cash credit will not become, will not fall within the ambit of 68 if they prove to the satisfaction of the assessing officer. Now, what is this cash credit on the first day of accounting year? This is a Supreme Court judgment delivered under 1922 Act. What is it telling? Large amount of cash is appearing on the very first day of the accounting year. It will not be accessible in that year, as it was not possible for the assessor to make such a huge income on the very first day itself when he started business. So very first day he had to pay cash. So very first day there was not possible for the assessor to earn that much income. So therefore, you cannot add that sum for that year. Whereas under 68 it says, even in case where an amount is credited on the very first day of the accounting year, an explanation offered is not accepted, such amount may be assessed as income of the assessee of the accounting year for which books are maintained. What is a large amount of cash appearing in the first year of accounting year is telling I will not be assessable in that year, as it was not possible to make such income. But under 68 what I will do? In that year in which the cash is credited, credit of cash is there, and if you don't give me explanation, then I am going to make addition under section 68. So credit represents actual receipt of money. The provisions of 68 can be applied only if there are actual receipt of money, either by cash or check. Suppose the assessing company allotted the shares in lieu of goodwill. They allotted shares to yes, for example, in lieu of goodwill, without any monetary consideration. There is no movement of actual money either through cash or through bank. Therefore, there is no requirement to make an addition under section 68. Now, in some cases we see that appellant or assessee can't evade 68 by entering only receipt in cash book and omitting corresponding credit entry from the books. It's making entry only in the cash book credit entry, and corresponding entry is not made from the books. So what is cash book? Cash book is nothing but cash book which is debited if money is received and credited if amount is spent or invested. Therefore, what is the law telling? Corresponding credit or debit entries are to be made by assessee in respect of accounts. If such entries are not made, books of the assessee would not tally. Therefore, failure on part of the assessee to make credit entry in the respective account would not entitle the assessee to claim that no account is credited. The assessee cannot be allowed to take undue advantage of his own mistake lapses. Therefore, whenever any money is received by assessee and it is entered in the cash book, it can be said that sum is credited in the books of the assessee, even though corresponding credit entry in the ledger account may be made subsequently. Because if the contention of the assessee is accepted, then it would amount to circumvent the provisions of 68, which would further amount to allow dishonest associates to bring unaccounted money in the books without paying the tax. Such a construction of the provision is not possible. Now they are telling previous year in 68. What do you mean by previous year in section 68? If you see here, the section is telling Yes, sir. Found credited in the books of an assessee maintained for any previous year. What do you mean by that previous year now? So we are discussing on that aspect. Now we are still in the first line only, sir. Don't worry. So what is that previous year? Previous year, you know, section 3 of the Act says means financial year immediately preceding the assessment year, etc., etc. Now, for the purpose of 16, what are they telling? In this case, what are they telling? Finding is recorded by 11 state appeals that the credit balance appearing in the accounts of the SSC does not pertain to the year under consideration. Therefore, the AO was not justified in making impugn addition under 68 of the Act. Now, again, one more case law of this Bombay High Court, Ivan Singh, what it says, previous year does not, any previous year, word any previous year is appearing in 68. Any previous year does not mean all previous years, but the previous year related to assessment year concerned. So if the cash credit are credited in financial year 6-7, it cannot be brought to tax in later assessment year 9-10. So suppose as we are discussing, you know, the maturity proceeds of FD. So that maturity proceeds of FD are of 6-7, but you want to bring it tax in assessment year 9-10, it's not possible. So High Court case is Bombay High Court is telling it is not possible. What is the Bombay High Court telling? Any previous year does not mean all previous years. Because the department took the contention, sir, the word is any previous year. So any previous year does not mean all previous years, but it means the previous year in relation to assessment year concerned. If the cash credit are credited in financial year 6-7, you cannot bring it tax in assessment year 9-10, later assessment year. So there are a host of judgments which have been followed. Bombay High Court. Now, if the sum of Lakshman Swarup Gupta and brothers, unpaid ITR 222 Rajasthan, if the sum is credited in the books of account in assessment year 62-63, it cannot be taxed in any other assessment year other than 62-63. Again, Mumbai Tribunal, as per 68, only amount found credited during the year can be added. As such loan received in earlier year cannot be added. So therefore, opening balance of loan, don't worry. Opening balances of loan, if the loan is taken in an earlier year, it cannot be added for the year under scrutiny. Scrutiny or the loan is taken in earlier years. They cannot add that loan in current year. Now, issue number 3, existence of books of account. I told you that sum of credit should be involved in the books of account. So, existence of books should be there is a precondition for invoking the section. So, books of account should be maintained by the assessee and the cash credit should be recorded in the books of account of the assessee. So, don't get confused. There is a difference between 68 and 69 and 69A. So, in the latter sections, you see the words in 69 and 69, what are they telling? The words books of account are followed by if any. When we say 16, books of account if any. Whereas in 68, if any is not there, sir. There is absence of the word if any. Books of account if any are conspicuous by their absence in 68. What does this indicate? This indicates that if the assessee is not maintaining any books, section 68 cannot be applied. Unlike section 69 and 69A, where assessee not maintaining books does not bar application of those sections. Yes, sir. Now, this 2014 Punjab and Haryana High Court, what is it telling? Subir Kumar Sharma HO. Just go through the CIT appeals findings. Very interesting case. So, you know, the CIT appeals findings is like this. First of all, it is not the case of the appellant that books of accounts were not maintained. Observation of the AO in this case has been that such books of accounts were not produced. In answer to question number 5 of the statement of Sharmaji, recorded by AO on 14/12/9, and which has been reproduced in the assessment order, Sri Sharma had stated that record of claims is as per books of account. Sri Sharma is the assessee, is telling record of claims is as per books of account. Answer to question number 6, AO is asking to provide the books of account of Sri Sharma, and Sharma is telling, I will provide it on 15/12 to 12/9. The 14/12, Sharmaji says, record of my claims is as per my books of account. 15/12, Sharmaji says, I will provide it tomorrow on 15/12. Again, with regard to query in respect of cash deposited as per books of account on behalf of the claims, he told no, that the list of claims as per books. Again, there is a query from the department. regarding the cash deposited in the books on behalf of these clients. In answer to question number 8, Sharmaji says, details are there and I would check from the books of and provide the same. So Sharma every time is telling, I will get back, I will see the books, and I will come back. But the fellow has not produced the books at all. Sharmaji is telling, all the details are there, sir, it is as per my books. He is never telling that I have not maintained books. He is telling, yes, details are there. I will give you, I will produce the same, I produce the books. But the fellow has not produced the books. Answer to these questions clearly show that the appellant did maintain books because Sharma is saying as for books, accept books. So tribunal is saying yes, the answer to these questions clearly proves that appellant is maintaining the books. It is therefore implied that deposits made in bank account were also entered in these books. You are asking details of the deposit in bank account. Tribunal is saying yes. Because you are telling I am going to produce books, I am going to produce books. Tribunal is telling yes. These entries, deposits made in bank would also be entered in the books of account. Accordingly, though in the absence of books of account, the AO has made the basis of addition to the deposits in bank account. This would tantamount to same as such deposits credits would also appear in the books of account of the appellant, which were somehow not produced before the AO. AO was therefore fully justified, tribunal saying, but you did not produce the books. AO was therefore fully justified in invoking clause of 68. And the ratio of the decisions relied upon by government council as would not take the case of appellant any further. So Sharmaji went on telling, I will produce books, I will produce the books, I will produce the books. But fellow did not produce the books at all. So therefore, the AO, the tribunal is saying, AO was fully justified in invoking clause 68. In view of the above, High Court held that there in respect of huge amount of cash deposited in bank, assessing paid to the list of persons who advanced cash to him along with their confirmation respect of said cash credits, AO was justified. He told, I will give you my client's details and it is as per the books. But the client who gave him cash, fellow has not given the list at neither has given confirmation, neither has reproduced the books of account. So therefore, matter also went to Supreme Court. The Supreme Court has dismissed the special leave petition against the above decision Sudhir Kumar Sharma NGO versus CA 2016. 69 taxman.com 219 or 239 taxman 264 Supreme Court. Another interesting case of the Bombay High Court in Arun Kumar J. Muchala. What is it telling? It was held that the contention of the SSC is that he has not maintained books of account. SSC is telling I have not maintained books of account, therefore you cannot add any income in under section 68 in absence of books of account. So what the court is telling, hey SSC, you are doing business. If you are doing business, it is incumbent upon you to maintain proper books of accounts. Court is also telling it may be in any form. Therefore, if you have not maintained the books, you cannot be allowed to take advantage of his own run. That means what will do? All the assessed tells are I have not maintained books of accounts. So you cannot add that cash credits in my hands under section 68. So in this case, what has happened? Huge amounts are credited in the account of the SSC and he has not explained the nature of the same. So how did the assessing officer discover the credits? He found the passbook of the SSC. You know today, the bank account, they are going to upload your details, say SP account more than 10 lakhs or current account more than 50 lakhs. So the assessing officer details deposit in bank, 50 lakhs, 60 lakhs, etc. So assessing officer is telling, I have the passbook of the SSC here. And there are credits of cash, deposits of cash, say 10 lakhs, 10 lakhs, 10 lakhs. This fellow is not giving the detail, nature and source. You know that two words are there, nature and source. Fellow is not explaining nature and source. You cannot come and give me a foolish argument. Sir, no, I have not maintained books of account. So, no question of any credits. Passbook is there, passbook belongs to the SSC. Fellow has made deposit of cash, but you don't have source of cash, nature and source, you are not able to explain. Therefore, the bank, the court is telling that the source and nature has been held to have been explained. Said amount has been deleted by your appellate forms. I have no problem. If you are not able to explain the nature and source the source and nature, then I am forced to make an addition. What was the dispute now? The dispute has remained in respect of amount of 9 lakh received from P, 18 lakhs from A. Both this fellow Arun Kumar has received 9 lakhs from P, 18 lakhs from A. No document was produced in respect of these transactions, nor the amounts have been confirmed from those persons who are shown to have lent me. Therefore, authorities below have rightly held that the nature of this transaction has not been properly shown by the appellant. Why I am telling you, my dear friends, is simply you cannot go to the court and stand there. Sir, books are not maintained, therefore cash credit. You cannot take an addition. They are telling no, it's your own wrong. You cannot take benefit of your own wrong. First of all, that passbook we gave you, the credits are there. 10 lakh credit is there, 9 lakh credit is there. You told it is from A or it is from B. Very good. You prove them no. Please get a confirmation letter from them. Please explain the nature of transaction. Please explain the source of transaction. You are not able to produce. So what to do? He is telling you are not giving the source and nature, etc. Therefore, and further in this case, at no earlier point in time, firm stand was taken by SSC that he has not maintained books. Whenever a direction was given to produce the same in any form, it was replied to SSC that he wants time to prepare. Whenever the assessing officer asked you for books, you always gave a reason that he wants time to prepare. So if you have not given the books of accounts, you have not submitted any documents. Many more opportunities were given by the AO for the production of relevant documents, including the books in the form of ledger, balance sheet, etc. However, such documents are never produced before the assessing officer. Therefore, ultimately the court says non-production of document is different from not maintaining books. Whenever, even after giving opportunities, SSC has failed to produce relevant documents and has failed to explain the nature and source of the amount received by him, order of the assessing officer and appellate authorities in respect of those amounts is justified. Else, I am telling you, in these cases, immediately you go before the court and you tell you have not prepared the books of accounts. What is he telling? In this case, further in this case, at no earlier point of time, firm stand was taken by SSC that he has not maintained books of account. The assessing officer only asked him, sir, this bank account there are 4 credits, so explain to me. Below is telling, I will explain, I will produce document, I will produce ledger, I will produce balance sheet, I will produce confirmation. Nothing you have produced. And also you did not take a firm stand that you are not maintaining the books of account. In any way, court is telling you cannot take it lightly and just because there are no books of account, you cannot invoke section 68. So therefore, in this the court has sided with the assessing officer and the addition is confirmed. Now, what are books of accounts? Sir, what is books of accounts, sir? Again, one more important definition of books has been amended in Finance Act 22. Please understand what was the earlier definition of books. What is the new definition of books? Why that amendment is made? We have a detailed discussion. We are only in the second line, sir, in third line or second line. So what is books? What was the meaning of the books, definition of books prior to Finance Act 22? What is the definition of books after Finance Act 22 or as per Finance Act 22? Why that amendment is made in the definition of books? Suppose Kamlesh is searched, I am keeping only one person now. Kamlesh house is searched. They found a diary. Is the diary books of account? They found a piece of paper. Is that piece of paper books of account? Or they found a books of account which is not tallied. Tallied means what? Debit and credit. You are not close the books of account. There is a memorandum books. There is a diary form in which debit is not there, credit is there is only debit example or there is only credit, and it's not tallied. Okay, that is one thing. Or piece of paper is found, or some dumb documents are found. What dumb documents? Some sheet of paper is found, piece of paper, there is no date. Some accounting is done, single entry accounts. Or they have found this tally books, cloud. Tally books are there. Now we are going to discuss that, how to go about. So what is the earlier definition of the books and what is the pre-amendment definition? Pre-amendment definition 212A. All of books are quantified in 212A. Earlier definition, what it says, books of account includes ledger, day book, cash book, account book and other books, whether kept in written form or as printouts of data stored in a floppy disk, tape or any other form of electromagnetic data storage device. Please understand. Includes ledger, day book, cash book, account book, whether kept in written form or as printouts of data. Fine. Now what is the amendment? Books of account includes ledger, day book, cash book, account books and other books, whether kept in written form or in electronic form. Now listen to me. Or in electronic form or in digital form, or as printouts of the data stored in such electronic form or in digital form. These are the new words added. Then or in a floppy disk tape, that is there. So what is added is whether books are kept in written form. After that, now addition is made, or in electronic form, or in digital form, or as printouts of data stored in such electronic form or in digital form. So this is added now. Why this is added and what is the importance? I will tell you. We will go through relevant case law. Because of this case law, Act is amended. We will see that. Now, enlargement of scope of books of account. So, what is it, sir? The pre-amendment definition covered only books kept in written form or as printouts of computerized books of account. What's the earlier definition? Only books of accounts kept in written form or as printouts of computerized books. Implication of the amendment has widened the scope of books to cover even books or data kept in electronic form or digital form. Earlier, books of account did not mean books of account in electronic form or in digital form. Now, it does not matter whether printouts of such data, books, records have been taken out or not. It is there in electronic form. It does not matter whether printouts of such data, books, records have been taken or not. Earlier, it was doing printouts. Because having books of account in hard copies were necessary for an assessee. Now, it does not matter whether printouts of such data, books, records have been taken or not. Electronic form is not defined, sir, in 212. Therefore, I have to necessarily go as per the Information Technology Act 2000 in the 2IR definition. Electronic form is defined as follows. Electronic form with reference to information means any information generated, sent, received, or stored in media, magnetic, optical, computer memory, microfilm, computer generated microfiche, or similar to it. Don't worry. Just to tell you what is electronic form is not defined in 212. It is defined in Information Technology Act. That's why I have taken it. Now again, 220 of the Information Technology Act defines what is electronic record. We saw what is electronic form. Electronic record means data record, data generated, image or sound stored, received or sent in electronic form or microfilm or computer generated microfiche. Just to tell you, is there Information Technology Act. Again, what is digital form? Same thing, not defined in Income Tax Act. Digital form also is under Information Technology Act 2000. Sorry, it is not defined even in Information Technology Act 2000, digital form. Therefore, we will take the general meaning. Digital means available in electronic form, readable and manipulable by the computer. Therefore, books of account will cover books of account maintained and stored in a software installed on a computer or maintained and stored on a cloud or a website. Now, why amendment is done? Objective of the amendment to enable addition to be made in such cases based on deleted data retrieved from CPU. Based on deleted data retrieved from CPU. So, there was such case, this is in Chennai Tribunal, it was held that the data retrieved from CPU cannot be regarded as books in terms of 212, old definition, because it was not there. It was held that definition in 212 only covers only regular books of account maintained by SSC for any previous year to record day-to-day transactions of business, including ledger, daybook, cash book, etc. Other books means any other books which are relevant in consonance, ledger, daybook, cash book, account book. Therefore, in order to include any other books of account maintained by SSC within the ambit of the term other books, these books must be relevant in the business of the SSC to keep track of transaction. Hence, other books refer to in ordinary course of business of SSC as stock books maintained in ordinary course of business to record movement of stock, or books of account maintained for salary. There is something called other books. So, we are giving the meaning of other books. It may be stock book, it may be book recording for salary, wages, etc. as required under the wages or statute purpose of any other law. It does not cover deleted entries of computer CPU, SSC has kept. SSC is functional in this manner. So, what you found? You found some deleted entries in the CPU. Now, does it form part of books of account? No. So, therefore, it does not cover deleted entries of a computer CPU. AO had made additions in a such case under section 68 based on data retrieved from CPU. The tribunal has deleted the additions as data retrieved from computer was not books of account under the definition in section 2 in bracket 12a. So tribunal deleted the additions as data retrieved from computer was not books under definition in 212a. Therefore, the amendment is made. This amendment overcomes the above judicial decision. Impact of the amendment. Now, what is the impact of the amendment? Why amendment is made? What is the impact of amendment? We saw even the pre-amendment definition, post-amendment definition. We saw a judgment. Now, what is the implication of the amendment? The impact of the amendment is additions under section 68 can be made in such cases based on the deleted entries retrieved from CPU of the assessee's computer seized during search of assessee's premises. Now you cannot tell, sir, you cannot rely on these case laws, and you cannot tell that it is not there in the definition of books of account under 2 in bracket 12a. So therefore, be careful today. They can make addition under section 68, even based on the deleted entries retrieved from the CPU of the assessee's computer during your search premises. One more thing I want to bring to your notice is amendment will also impact provisions of Prohibition of Benami Property Act 88. Please be careful. No, we will do 10 more minutes, don't worry, another 10-15 minutes, 1 hour only. We will continue after 3 days. Before that, please understand, my dear friends, this amendment of books will also impact the Prohibition of Benami Property Act 1988 and your Black Money Act 2015. Why? We will go through that. I want to go through slowly so that it's a very complicated section. It has a lot of ramifications, lot of consequences. Slowly the professionals should try to imbibe all these things. Sir, now 231 of the Prohibition of Benami Property Transaction Act 1988, for your information, this Benami Act was introduced by late Sri Rajiv Gandhi. It was ready in 1988 itself. Benami Property Transaction Act was ready in 1988. But for 28 years, this act was a sleeping beauty. It was never implemented at all. It was implemented in 2016, just before demonetization. Mr. Modi implemented the Prohibition of Benami Act after 28 years before demonetization. Put the record straight. Before demonetization, what happened? Your IDS scheme was there. Before IDS, what was there? Scheme came for domestic cheaters. Before that, for foreign cheaters. So domestic cheaters, IDS. Foreign cheaters was before your IDS, that Black Money Act. Domestic cheaters came your IDS. Immediately after IDS itself, 1st of October, I am telling you, ruthlessly this Benami Act is passed. 1st of November, nobody knows, silently it has been passed. Then 8th of November, demonetization has come. So in demonetization, they corrected all this Benami Act also. 8th of November. So let me tell you, now anyway, we will not go too much in detail, come back to 68. Section 231 of the Prohibition of Benami Property Act provides that for the purpose of that act, words and expressions not defined in that act. 231 is telling, sir, of what Benami Act? For the purpose of this act, words and expressions not defined in this act shall have the meanings assigned to them in definition of the following acts. So what is not defined in this act? To take the meaning from the following acts. Companies Act 13, Company Depositories Act 1996, Partnership Act 1932, Indian Succession Act 25, Indian Trust Act 1882, Limited Liability, Partnership Act 2008, Prevention of Money Laundering Act PML 2002, and the Income Tax Act. Since the PPT does not define books or books of account, expression of books or books of account in that act will have the meaning assigned to it in Income Tax Act. Therefore, this amendment will impact the PPT Act as well. So, what is books? They are telling you, please take it. The Income Tax Act should be mentioned there, don't worry. That is a typing here, type word. So, books of account. Now, what is 215 of Black Money Act? Your undisclosed UFIA, Undisclosed Foreign Money, Foreign Income and Assets and Imposition of Tax Act 2015. Provides that, again, 231, what is there in PPT Act? It's same in Black Money Act. It says provide that all other words and expressions used herein, but not defined and defined in Income Tax Act, shall have the meaning respectively assigned to them in the act. As books of account are not defined in Black Money Act, definition in 212 will also apply to that act also. So this amendment will impact Black Money Undisclosed Foreign Asset Imposition Tax 15 also. Okay, so just for your information. Now what about tax rates in the case of the firm? Tax rates in case of the firm. Now let me tell you, my dear friends, this 68 and cash rates in case of the firm. This is the last issue before we close today. Now partners introducing capital in the firm. Now I am telling you, many accounts you are seeing credits during the year 6. Partners is using credit. Assessing officer in year plus what it means credits during the year. Here is a case of a firm. Firm will tell, sir, I received this credits in the partner's account, I received from partner. Very good. So partner is introduced his capital. The question therefore is, if at all the firm is not explaining the source for the credits, will it be taxed in the hands of the partner or will it be taxed in the hands of the firm? So it should be taxed in the hands of the firm itself, not partner. Because here the source is only for loan or borrowing. Please understand. Loan or borrowing only. This is not in case of a partner or firm. So firm will ask, from where did you get money? Through partner. They cannot ask partner, how did you get money? I beg to differ. The word used is loan or borrowing. Loan or borrowing. This is what? Investment. I will introduce some capital. Unless you take a loan from a partner, then you will be in problem. This is not loan or borrowing. Partner is introducing capital in the firm. So that is how we want to argue, but there is no need to, inform the client now. You please asking the source. But I am telling you how to argue in the courts. Loan or borrowing is different. Introducing capital is different. Don't worry. So therefore, but there is a difference of judicial opinion. I am going to give the case laws. Difference of judicial opinion is that we will discuss those case laws. So first case law is telling, the tribunal after having considered the material record had found that 68 was not attracted in case of the reason that in this case credit in the books of account of the firm was an account of introduction of capital by partners and the firm had failed to prove the amount paid in the books of account and as such it would be assessed in the hands of partners as an investments. High Court held that this was a finding of fact and no substantial question arose from the order of tribunal. Okay, so Burma Electronic Company, it says assessee was a firm comprising of 12 parties. Cash credit to the extent of 10,000 of Sri Hari Singh, 5,000 Gurudev Singh, 5,000 Dhanraj, etc. have not been properly explained by assessee as sufficiency of funds at the time of assessment in their case to that extent have not been explained. In these circumstances, the tribunal held that this amount of cash credits of the partners cannot be assessed as income of the assessee firm under 68, but it may be assessed in their individual hands. This is what Kamlesh was telling me now. It may be assessed in their individual hands as their unexplained investments if that is permissible in 69. Thus, according to tribunal, the result was that the above calculated unexplained cash credit relating to partners cannot be added in the income of the firm as its unexplained income. High Court now held that, in our opinion, the reasons assigned by the tribunal for deleting the additions are directly referable to the provision of 68, and we do not find any cogent reason to interfere with the same, merely because on a reprisal of the entire matter, it may be possible to form a different opinion. Okay, similar view has been expressed in Abhyudaya Pharmaceuticals, Patel Vishnubai Kambila, etc. Now, one more case law, attacking injustice. In this, the MP has held that Madhya Pradesh court has been held that the assessee firm had satisfactorily explained the credits standing the name of partners. Responsibility of the assessee stands is that. Once it is established that the amount has been invested by a particular person, maybe a partner or an individual, then responsibility of assessee firm is over. Assessee firm cannot ask the person who makes the investment whether that money investment is properly taxed or not. I don't know. If that person owns the entry, then the burden of assessee firm is discharged. Now, myself, Kamlesh and Gautam, we are partner in the firm, ABC. And this case is with the first scrutiny of ABC. So, Kamlesh has introduced 10,000. Kamlesh says, I was the firm. Yes, it is my, the source for introduction of capital in the hands of the firm is the amount introduced by Kamlesh. So, my liability is discharged. I am telling why Kamlesh is owning that amount. Kamlesh owns that amount. Yes, sir, 10,000. I am telling you. I cannot ask, how will you get that 10,000? I am not supposed to ask, I don't have the right also. If that person owns the entry, burden of assessing community staff, Kamlesh is owning that entry. Yes, sir. I confirm having introduced 10,000 capital. It is open to the AO to undertake further investigation with regard to that individual who deposited the amount. So, if Kamlesh has deposited the amount, AO wants to further investigate, he may issue notice under 130 pieces. or he will issue summons to police in order to, investigate the matter further and take further details. Now, Indian Rice Mills Allahabad, where the capital contribution are made by partners prior to commencement of the business of the processing firm, it is for the partners to explain the source of such capital contribution, because it is made before the commencement of business. If they fail to discharge such owners, then such capital contribution, although entered in the books of the assessing firm, cannot be regarded as income of assessing firm. Now, Allahabad versus CAD Allahabad Jaiswal Motor Finance. Court has held that it appears to be well settled that if there are cash credit entries in the books of the firm in which the accounts of the individual partners exist, and it is found as a fact that the cash was received by the firm from its partners, then in the absence of any material to indicate that they were profits of the firm, it could not be assessed in the hands of the firm. We are therefore of the opinion tribunal did not commit any error of law, rightly held that deposits shown in its accounts are satisfactorily explained. So you can see here the diversity of judgments. Now this is the last, case law, and then we can take some questions if there and then close for the day. This is a Kishore Lal, Santosh Lal. So in this case of cash credits in the accounts of a firm, following points need to be noted is what Rajasthan High Court is telling. There is no distinction between cash credit existing in the books of firm, whether it's a partner or third party. Burden to prove the identity, capacity, genuineness is on the assessee. If the cash credit is not satisfactorily explained, ITO will be justified to treat as income from undisclosed sources. The firm has to establish that the amount was actually given by the lender. The genuineness and regularity in the maintenance of the account has to be taken into consideration by the taxing authorities. If the explanation is not supported by any documentary or other evidence, then the deeming fiction created by Section 68 can be invoked. Simply because the amount is credited in the books of the firm in the partner's capital account, it cannot be said that it is not the undisclosed income of the firm, and that in all cases it has to be assessed as an undisclosed income of the partner alone. Court is giving certain parameters. Now, Assam High Court, interesting case, Bolaram Daga, that is his wife. Mere fact that the third party making deposit in a firm happens to be the wife of the assessing partner does not ipso facto make the assessing come into the knowledge of the sources from which money was realized. Mere fact that partner is unable to satisfy authorities as to be the source from which his wife derived the money which she has deposited in the firm cannot be used against the partner. Fine, sir. Are you sure is there?